Alright, so I'm just going over this trade that happened from yesterday's video. As you can see, the effort reward was here, stop was above here. Over here got a little concerned, but there was no volume. And it went straight down to this particular, which is also known as Former Creek, right around here. Because he was prior resistance and then it rallied and blah blah blah. So it went right to the target. So this was what I covered yesterday. Explained that it was low volume up, high volume down. Interpreted it as lack of demand followed by heavy selling, which to me was a sign of weakness, followed by low volume pullback, effort reward. When it went down like this, I saw this as springboard formation. There was an upthrust, but it was again on low volume, as indicated by LV indicator right there. So nothing to be worried about because it's 2000. Like, don't sweat it. It cannot. They cannot attract the following. 2000. Look at before 23, 15, 15, 8, 23, 35, 15, 21, 36. There's no demand there. If anything, you just fucking add to the position, especially after it makes this break. It's very easy to just short it. So anyway, because there's nothing here. In Wyckoff vernacular, this is known as how he described it. He gave a very a little more elaborate term called the feather's weight. That's how he described it. Okay. That's how it could be described. That's when the market later on, folks can also describe it as a lack of demand. Lack of demand prior to the markdown. The only thing is, like I explained yesterday, the ranges are tight, right? It's not like going up and up and up and up and up. So don't expect the down move to go down and down and down and down. You have no reason to, especially because these are untested areas right around here. So that's why, because some schmuck is gonna buy the pullback when it goes there. Alright, that's just the orders are like they're there. So you just have to know like how to get out and just know those levels, those support and resistance levels right here and here. Like this was the danger zone. Danger zone is right there for the shorts. Because these are untested levels. Why? It rallied up, up. So they want, this is untested. And I expect orders to be there, or some traders to try to defend that area for a minor bounce. Could be more, could be not. I don't know, but I know that that's an untested area, and I don't want to mess with that. So why not just get out? Anyway, so up here it was very clear, low volume, sign of weakness, LVP, bing, 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 effort here, low volume again. Don't be afraid of it. This is just a maneuver. You have to know where to keep your stop above the rally high or the prior high, because you don't want to keep it right there. If you're keeping a tight stop, it's not going to work. These markets are notorious for shakeouts. You see something here as well, like right there on 17,000. So anyway, so it wasn't that big of a move. Like the other market I was looking at, maybe I should have gotten into that, was the GBP, like right there. This move was much bigger and more volatile, but I didn't want to mess with this 60,000 volume coming in because I just didn't want to mess with that kind of volume, but I didn't realize it was effort. And the reason why I didn't want to take that was because of, you see this low volume here coming off of this area. coming off of former resistance, low volume twice. Those were the smallest numbers in multiple waves. So I didn't want to take like low volume, and then you have like 60,000 up. That could have initiated a trend, but they also failed, and it really became effort. But that was only clear after this move down, and I'm not gonna stay up until 3 o'clock. I want the order in and go to sleep and wake up in the morning. That's it. So I don't want to go through all that, and but this one it worked, but I was more. I saw it more clearly on the euro right here as I marked up yesterday night. I haven't added or changed anything to the chart, just indicating the here to here, and that's about it. So I just want to continue doing these things where I examine trend, and you're gonna pick up a lot because this is the real stuff, not the shit you see on the internet. And second of all, what I want to do is also analyze uh, these turning points. You know, like here, these are turning points because why this is extremely important. Wyckoff knew about this. Is these turning points are where supply overcomes demand, or demand overcomes supply. So the behavior of these turning points, and there's so many of them, the supply and demand behavior of these turning points are critical for the tape reader. They are absolutely critical. When you're doing your trend reviews, there's a couple of ways you can learn how to trade and analyze and all that. You read all the courses, which are absolutely absurd, like what they have online. They're I don't know. Just forget it. But what needs to be done is these points, these swing high, swing low points, especially the ones that come to support and resistance areas, they need to be analyzed. Okay, you want to analyze them. What most people will do is just look for an upthrust, meaning what they'll do is they just draw a line and they look for whether it breaks out or reverses, right? This is what they'll do. Okay, this is upthrust. Or they'll look for a spring, or draw a line and see, okay, it bobbed that area and it reversed up. But how do you know if it's going to continue? How do you know it's going to initiate trend? And even if you don't know, like, that's fine. But what you want to do is you want to have a deeper understanding, right? You'll have a deeper understanding and understand the supply and demand dynamics of what is going on at these points. All right? The market itself will tell you about itself. The market will tell you about itself here and here. So these points need to be studied. You want to be able to study a point like this, where you have a resistance area, you have a retest of that resistance, it has a lower volume, and there it goes down. So what makes this point special? Because the entire trend turned from this point. Isn't it important? Obviously it's important. And another area you wanna is right here, where now this support level becomes resistance. So as the market goes to that area, you want to be able to study that area and see if that support become, what is it, support become resistance. Like, how does it become resistance? How does supply and demand work so that there is a turn? How does supply and demand work so that that turn is a big one, right? So this requires more than a bar chart or a wave chart. You can't do this type of study with a bar chart or a wave chart because they will not give you the microscopic view as Wyckoff described it. You need some type of order flow chart to be able to see what has happened. The only thing you can do with a bar chart is draw a line and see, okay, it rallied and then you had a red candle or a red bar. So the only thing you can really do is look for follow through or lack of follow through, or like some type of candle like formation, you know, and and I guess you can go down to lower time frames, but in my opinion, really what needs to be looked at is an order flow chart. So I'll just give an example of this area, the 23 or whatever. Like what I want to do is go to some type of tape reading chart and see what happened at that area. What made it um, basically, I want to see how supply overcame demand, or how demand overcame supply at the pivot point, or at the swing high, swing low point, or at the turning point. That I think is very important, um, and would add a really good analytical tool to your arsenal in order to be able to um, trade, better. And this is what Wyckoff, like in his trading course, he actually described the tapering course as a point figure chart with volume. And what he did was he used it in conjunction with the wave chart to see what was happening at these turning points at a microscopic level. He used 1/8 of a point, and and that's it. So have a good day. Bye.